The Bank of Canada has just announced the new decrease in the rates, and I'm with Sherlock Yam here, and he's going to explain what has happened in our real estate market.
The Bank of Canada decided to drop rates again today with the Bank of Canada interest rate meeting. It's a further 0.25% decrease. That's the third time in a row.
Excellent.
0.75% in the last 3 meetings. And there's signals for more to come. There's 2 more meetings, October 23rd and December 11th. Sounds like they may cut rates at those meetings as well, and then into 2025.
Okay, that sounds great. So usually, how often in a year does the mortgage rates drop? Does it happen all the time that it drops like 10 or 12 or 7, or is it like...
We'd like it to happen every time,
Okay.
but Bank of Canada meets 10 times a year.
Okay.
They decide month by month in terms of whether or not to drop the rates, keep it steady, or increase rates. This has definitely been consecutively 3 times in a row. That doesn't normally happen. Usually they do a couple rate drops and then take a pause. But with the inflation being where it is, when you take out mortgage costs and shelter costs, our inflation is quite low, but the mortgage rates and interest rates are propping it up. So that's the reason why the Bank of Canada is continuing to decide to drop rates.
Okay, so but if we go down even lower in the spring or even into the summer with those lower rates, that means that this inventory is going to go up. That means it's going to be more homes on the market, driving prices up.
That's right. Obviously, in a perfect world, you wait until the rates are at the lowest, and then you start looking to buy a home, say sometime in summer, right, next year. But as rates continue to drop, and again, it's going to be pretty gradual, you're going to see more people coming into the market, more activity, which means that sellers are going to be able to price their homes a little bit higher and higher if there's more and more demand.
That's right.
So the longer you wait, it might be a situation where you get into a multiple offer situation, or that perfect home isn't there anymore.
Exactly.
The good ones move quickly.
They do. And that's why right now is actually an excellent time to talk to your mortgage specialist like Sherlock here and to figure out what is your game plan. Is there anything right now currently on the market? Because it will bring up that borrowing cost that you'll need.
Yeah, and I suspect, just as what happened during COVID, that was obviously an accelerated timeline, but people were priced out of the market, and that was done fairly quickly. I think this might be a little bit more gradual, but you don't want to get yourself in that situation. Find out what you can afford now comfortably, and then find out what your maximum is, because there might be a situation where you have to offer slightly more just to compete.
But I feel like, sometimes it's okay if you love that home and depending on the market. But what we're going to do in the next one, we're going to break it down for you based on a borrowing cost, and we'll break down some numbers.
Awesome.
So Sherlock and I are going to break it down for you based on a purchasing price of $700,000. But before we get into that, we're going to show you exactly how we're going to do these calculations so you can do it at home. So we have our purchase price, we have our down payment, we have our mortgage, we have our rate, and finally we have our payment. So Sherlock, let's break it down off $700,000.
Perfect. For a $700,000 purchase price, ideally you want to have 20% down. So 20% of $700,000 is $140,000. The reason why you want 20% is because it's going to save you on the high ratio mortgage insurance, plus your monthly payments are going to be a bit lower. We'll do some calculations later on with different scenarios.
Okay, so we did the 700,000 times 20%, which is equal to the 140. Okay.
That's right.
So
and then the mortgage amount.
The mortgage amount here. And how do we get that?
That'll be the difference between 700 and 140. So that's $560,000.
Okay, so $560,000. So we took this number minus that. It's 560. Okay, great. And then the rate. So we're going to go based on yesterday's rate or the previous one. So let's just say September 3rd. What was yesterday's rate?
So let's say the rate's about 5% before the Bank of Canada rate decrease today.
Okay. And then payment. What do we do for payment?
Now payment, that's going to be the interesting one. It is a little bit more challenging to calculate. So I do have a mortgage calculator, which Aaron can post on the link below, so you can click on that.
Fantastic.
But that will allow you to break down what the payments are going to be. Now, based on 5%,
5%, yeah.
It's going to be $2,900.
Hold on. $2,989
per month.
89 per month. So your monthly mortgage payments will be $2,989. Okay, so we're under $3,000 based on this.
That's right.
Okay, so let's take this number now for the new drop that we just had. For today's mortgage rate that went down for the Bank of Canada. So let's use the same number. Okay,
So 700,000 as the purchase price again.
700,000.
Down payment at 20%.
Okay, oh yeah, same thing again.
140,000.
Whoops, so we'll go 140 again.
And the mortgage will be the same as well,
Exactly.
560.
Same. 560, and this is easy to do at home too. So let's say you have a purchase price of $1 million, so use the same calculation as well based on the 20%.
That's right.
So 560, and then what is the new rate now?
So today's rate with the 0.25% decrease, we can make the assumption of 4.75.
Awesome, so 4.75%.
Perfect. Then you take your trusty calculator.
Trusty calculator, again,
Enter
we'll send it
in
in
the
the
rate.
link.
Perfect. And the rate at 4.75 brings the monthly payment to $2,906.
Hold on, $2,906. $6. Okay, great. So we know that last time, a little bit higher, a little bit less. So if the mortgage rate does go down in, I believe, October
23rd.
October 23rd is the next rate. And so we'll see another increase again. So it could be down to 4.5.
That's right.
Right?
Yeah, and it's roughly about $80 difference. So if it goes down by another 0.25%, you can assume another $80 reduction in your monthly payments based off of this calculation.
Okay, in this scenario here, we're gonna break it down with a down payment of 10% this time, right, Sherlock?
That's right.
Okay, so let's use the same numbers. We're gonna use $700,000. Oh, but something is different on our board here. We have our purchase price, our down payment, our mortgage insurance. What's a mortgage insurance?
So mortgage insurance is essentially when you have less than 20% down, it's mandatory that you have to pay this insurance to cover the risk in case you default on your mortgage. So, you know, highly unlikely, but it is still mandatory when you have less than 20% down. So we have to factor that into your mortgage.
Gotcha, okay. And then we have our mortgage again here, our rate, and then lastly, our payment. So Sherlock, let's break it down again. Okay, so our down payment will be
10%.
10%, that's right. So I'll put 10% here.
So that's $70,000.
70,000, and don't forget again, you can take that number times 10%, which equals our 70,000.
That's right. Now, what you can't do at home is figure out what the mortgage insurance is, because that's going to be dependent on the percentage of down payment. So you can download the mortgage calculator, which Erin will post again the link below.
Yep.
On a mortgage of purchase price of 700,000, 10% down, the mortgage insurance is 19,000.
Hang on a second. 19,000.
530.
530. Okay.
That's right.
So almost 20 grand.
Yep. So then your total mortgage is going to be 700,000 minus 70,000, but then you add the mortgage insurance.
We're adding this, so I plus this. So I'm just going to draw a line for easy math.
Perfect. So the total mortgage is now 649,000.
649,000.
$530.
Okay. That minus that plus that. Okay, so that's our mortgage.
Yep.
And this again was based on the previous rate, which was
We'll use 5%.
5%. Okay, so what is our monthly payment if we're going to be putting a 10% down?
So the monthly payment's going to be $3,777.
Hang on a second. 3,000.
777.
777
and 70 cents. Lucky number.
oh my god, so lots of sevens here. Okay, so higher monthly payments, of course, if you're only putting 10% down, unlike the last scenario, which was 20%.
That's right.
Okay, so that was previous, but now with the new rate change,
Yeah, let's see the difference.
let's see the difference. So let's base it again
purchase price.
on 700,000.
And then the down payment, again, 70,000.
70,000, so that stays the same.
And the mortgage insurance in this case is going to be the same thing because it's not we're not changing the down payment. So
Okay.
$19,530.
And if you don't have the app at home, of course, you can always reach out to Sherlock Yam here. So I'm going to leave his contact details. So instead of doing it yourself, why not call a professional and have him do all the numbers for you?
We do it
so
for
much
free.
easier and for free. Okay, so we're going to plus that, and that was a minus.
That's right. And so the mortgage amount is going to be the same as well, $649,530.
Okay.
And with the rate decrease of 0.25% today, we can assume that it's going to be 4.75%.
Okay, so
For illustration.
4. My 5 looks funny. 4.75.
And then the monthly payment drops down to $3,685.
Hold on. 3,685. 85.
And 79 cents.
Not as many sevens in this calculation. Okay, so now look at the difference here. Sorry, what is this difference? Let's calculate how much.
That's
much
about
you
a
actually
90.
went down.
Yeah, $90 difference.
That's pretty good. Okay, so now we're at 36.85. So if it goes down again in October, so we can see similar coming down again. So it's great to see.
Yeah.
Visualizing how much you would need.
Yeah, basically every 0.25%, about $90 difference in this case when you have less than 20% down.
In this scenario here, we're going to break it down with a minimum down payment. Sherlock, what is a minimum down payment?
Thanks for asking.
Not many people know.
It gets pretty confusing. So a lot of people think 5% is the minimum down payment, but that's only the case when it's a purchase price of $500,000. When you go above $500,000, it's actually 10% of the difference. So we'll do that calculation together.
Sure.
In this case, we have a purchase price of $700,000.
Okay.
Now
And
remember,
everything stays the same, right? So
Everything
we still
stays the
have
same.
the down payment, mortgage insurance, mortgage rate, and payments.
That's right.
Okay.
Yeah. So on the purchase price of $700,000,
Yep.
the first $500,000 is 5%. So that's $25,000.
Okay. So 25,000, and that's
For the 5% of the first 500. Then you have to add the difference between 500,000 and 700,000, and that's 10%. So that gives us 20,000. So you can plus 20,000.
so a plus 20,000 here, because that 10% was the difference when we calculated. So basically, it was 700,000 minus 500,000, right? Which was
200,000.
200,000.
And then 10% of that.
And that's why you got that 10%. So that's what he meant by the difference of calculating the difference, how we got that. So that was 500,000 times 5% equals this. The 20,000
Was 200,000 times the 10%.
Times 10%.
So the total down payment,
It's going to erase this so we can confuse. Okay.
so the total down payment, which is the minimum for 700,000, is $45,000.
$45,000.
That's right. So that's the absolute minimum. You can't do less than that. That is by our federal government as a very minimum.
Okay.
Now the mortgage insurance on that, again, we're going to have to pull out our calculator to figure that out because that is the minimum. Now the minimum mortgage insurance in this case is $26,200.
26,200.
200. That's right. So how we get to your total mortgage is $700,000 minus the $45,000 down payment, but then you add the mortgage insurance of $26,200. So that gives us
Hang on.
$681,200.
$681,200. That minus this plus that number equals this is our mortgage.
Yep.
And this was based on previous rate, which I know was 5%.
5%, yeah. All right, and
Okay.
then the payment, again, you can use your trusty calculator.
Monthly payment would be
$3,961.
$3,900. Hold on. $3,961.
Yep.
61.
89 cents.
89 cents. $3,961.89
Yep.
based on previous.
Yep.
Okay, so let's base it on the new rate at 4.75. So everything should stay the same.
Should stay the same, yeah. So we're gonna do $45,000 as a down payment, as we did that calculation earlier.
Okay, so I'm just gonna skip since we already know the math here. I'm gonna skip it, so I'm gonna go $45,000,
Yep.
which was here, and then we're going to plus our mortgage insurance number, the 26 number.
26,200.
200. And again, why us do it? Like let's get the professionals to do this. It's so much
Exactly.
easier.
And then the total mortgage of 681.
Yep, should be the same.
200.
Oh wait.
Yep.
Yeah,
681.
681.
And then 200.
200.
And for the rate, with the 0.25% decrease, we're going to use 4.75% as the illustration here.
4.75. What is our monthly payments? Well, obviously,
Pull up our
less.
trusty calculator. So 3,865.
865.
51 cents.
51.
Awesome.
Okay, great. So minimum down payment, so it's great. We saw the 20%, 10%.
And then the minimum.
The minimum down payment. So the difference also with some of them from the 10% and the minimum, this number again.
The mortgage insurance changes.
The mortgage insurance change,
Yeah.
right? Okay,
So
great.
yeah, so the payment's about $100 difference there. And you can expect that for essentially another 0.25% decrease, hopefully October 23rd, December 11th. But yeah, the mortgage insurance premium is all based off of down payment, which is why you see that it's significantly higher based off of the minimum versus 10% down.
That's right. So if you do have a higher down payment, it makes more sense then just to do the 20% here. But of course, for any mortgage questions, you're gonna want to call this guy.
That's what I'm here for.
Yes. So any real estate related questions, feel free to reach out to me. I'll leave both of our contact details down below. And of course, for more information about real estate and mortgage, please subscribe. So send me a link and hit that notification. And you can also find all of our information on all of our platforms, including TikTok, Instagram, Facebook, and of course, YouTube. My name is Erin Price Emery, your local real estate expert. Thanks, Sherlock.
Thank you.